Hello everybody and welcome to this special webinar event. I'm Terry Ryder, founder of hotspotting.com.au, and today you have the opportunity to get answers to your most urgent questions relating to the nation's housing markets. You may be wondering what's really happening in real estate markets across the country, given the conflicting and confusing reports that appear every day in mainstream media. You may have seen headlines or sound bites about falling prices or the prospect of a market crash because interest rates are rising. Whatever your most pressing issue, today you have the opportunity to get some answers. And now with our promotions of today's webinar, we actually encourage people to send their questions in before today so that I give them some thought for my answers and to prepare some information. So I'm going to kick off today's event by responding to some of the questions that were received earlier, and then I'll turn to questions that come in to the chat box and the Q&A panel throughout the next hour. So I encourage you to type the questions that you have about housing market issues into either the chat panel or the Q&A panel that you should see in front of you. Okay, so turning to the questions that were received in the past couple of weeks. The very first question comes from Felicity, who was asking, is it possible to buy for around 350,000 for excellent capital growth and high yields? And it's a question that we get a lot because increasingly people are worried about whether with the amount that they can afford to borrow and the amount they can afford to pay, whether they can actually access property in the current market that's going to give them the growth that they're looking for, as well as high yields. And the answer is, well, yes, there still are opportunities to do that. There are still locations around Australia that meet that brief. They're becoming harder to find, of course, given the growth that we've had in property markets in the last 18 months in particular, but they still do exist. And I'm going to touch on some examples. It's not an exhaustive list, but we're going to look at some opportunities where you can buy affordably in areas that have good rental yields and good prospects for future capital growth. Latrobe Valley in Victoria is a great example of that. It includes locations like Moe and Morwell, as well as Traralgon, which is a little bit more expensive. They've had amazing property growth in this market in the last 18 months. We've seen prices rising 20–30% in many of the towns of the Latrobe Valley, Moe, Morwell, Churchill, Traralgon. But because they're coming from such a low base, we're still talking about, in the case of Morwell, median price still below 300,000. Moe is a little bit above there. The rental yields are still good, above 5% in those places, and the prospects for capital growth are good because the Latrobe Valley is very much a dynamic economy with jobs being created. It's being targeted because it's close to Melbourne, offers that lifestyle outside of the city, and offers affordability, fueled by the ability of people to work remotely. And a lot of investors have been buying there as well because, again, affordability and also the low rental yields. Other parts of the Victorian market also offer those qualities. Shepparton is a place where the median price now is about 370. Always keep in mind with median prices, the median means that half of all sales are for less than that figure. So in the case of Shepparton, you should still be able to find property around that 350 mark for a city that you're asking about, and rental yields there still above 5%. Merbane and Redcliffe, they're both suburbs of the regional city of Mildura, way out west and a little bit north in Victoria. And again, very affordable prices there, very good rental yields. And then way out east in the East Gippsland area, towns like Bairnsdale still have prices, houses typically priced in the 300,000s and with rental yields above 5%. So those are some of the places in Victoria that meet the criteria that Felicity is asking about. Regional South Australia also has options in that price range, places that have good credentials for future growth and offer that level of affordability that investors like Felicity are looking for. Murray Bridge, median price still well below 300,000 and yields typically above 5%. Mount Gambier is a very important regional centre in regional South Australia, the second biggest city after Adelaide in South Australia. median price just around the $300,000 mark. Port Augusta is a cheapie with prospects. You can typically buy houses there for below 200,000. I'm a little bit bemused at why prices haven't increased more in Port Augusta, because it's a very strategically located town. It used to be fired by coal-fired power stations, and they've closed down, which is one of the reasons why the prices are so cheap. But that market is being revitalized by renewable energy projects, and there's some very big ones that are under construction and others that are also proposed for Port Augusta. But right now you can buy there very cheaply, and rental yields are higher than you'll probably get anywhere else in Australia at the moment, because rents are much stronger than prices. So it's a little bit of a risky proposition, but it does have prospects for future growth, I believe. So that's a prospect. And then of course, Port Lincoln is also a regional centre in South Australia that offers that level of affordability and prospects for growth. So also touching on that first question, Felicity, but this question specifically came from Brad, who was asking about the northern suburbs of Adelaide and wanting to know more about market activity and prices there. And I thought it was a good one to follow that question from Felicity, because it also speaks to the topic of where can you buy for, you know, that $350,000 price point in locations that have prospects for growth, low vacancies, good rental yields, all those things that in a perfect world developers would like to access. So in terms of the suburbs of Northern Adelaide, we're talking about local government areas like Playford and Salisbury in particular, and then on the extreme northern fringe of the Adelaide metropolitan area, Gawler, which is a place that I like a lot, a town in its own right that's been there for quite a long time. It's got a nice historic fabric to it. It's the gateway to the famous Barossa Valley wine district, but it's increasingly being connected through urban sprawl to Adelaide. The transport links are being improved, so it's a good place to consider. But all of these local government areas, particularly Playford and Salisbury, are areas that offer very affordable prices, very low vacancy rates. That's a factor right across the Adelaide metropolitan area. Low vacancies is a national problem. Well, it's a problem if you're a tenant seeking somewhere to rent. It's a great thing if you're an investor, owner, or a landlord, but it's an issue right across the country, but nowhere more so than in Adelaide. It's hard to find a postcode anywhere in Adelaide that's got a vacancy rate as high as 1%. Northern Adelaide also has many major employment zones. It's one of those persistent fallacies, myths in real estate that most people get up every day, get on a train and go to the CBD to work. Even pre-COVID, that wasn't the case. Most jobs are actually out there in the suburbs. And the northern suburbs of Adelaide have some very, very major employment zones. So if you're buying up there, there's a prospect of buying very affordably in areas with good infrastructure, good amenities, close to where you might be working. The Edinburgh Defence Base is a very major employment zone up there. There's many very big commercial industrial estates with big businesses set up. A lot of people are working there, and the transport links are good too. So there's all sorts of reasons why you might want to buy there, either as a home buyer or as an investor. This is some of the pricing in those northern suburbs of Adelaide. Andrews Farm, Craigmore, Elizabeth Vale, Manopara, they're all got median prices in the low to mid 300,000s for houses. They've all got typical yields between 5 and 6%. There are cheaper areas. There's actually 8 suburbs with Elizabeth in the name. They tend to be pretty down market. Some of them are more so than others. There are still Elizabeth suburbs with median house prices in the 200,000s. As I say, they're down market areas, a little bit stigmatized for that reason, but very good, affordable buying. They're all areas that have got good amenities, good infrastructure, close to jobs. And they can be, for people either as home buyers or investors on a budget, they can be very good places to target. And the local government area of Salisbury, the suburb of Salisbury itself, the suburb of Brahma Lodge, again, places with median prices in the 300,000s, good rental yields, low vacancies, all of that. And I'd also, just extending the argument a little bit to some other parts of Adelaide, if you're looking for affordability, the local government area in the far south of the Adelaide metropolitan area, which is called Onkaparinga, includes suburbs like Christie Downs, where median price is about 365,000. Williston is a northern suburb up in the Gawler area, median price 360, and typical yields around 5,000. So lots of good options for either home buyers, first home buyers, investors seeking affordability. Not many parts of capital city Australia where you can buy houses on land in the 300,000s and get those sorts of rental yields and prospects for growth. Now, all these places listed on the screen are places that are showing really good growth. The Adelaide market is extremely hot, probably only Brisbane amongst the major cities of Australia is a market as hot as Adelaide. People have finally discovered that Adelaide has a lot to offer, that its economy is strong and growing, and there are really good prospects for growth in that market. Okay, going to another question. This was also from Felicity. Just asking a question that I think is probably top of mind for many people considering property investment. Is it risky to buy sight unseen? Because Felicity has heard or read that many people are buying properties just based on the internet photos. And I'd say, well, yes, it is very risky to buy like that, but you can buy real estate safely and prudently and during due diligence without actually having seen the property yourself. And I've done that. There's my own real estate that I've never actually seen in the flesh. But I've done it by using a buyer's agent. The key thing is, I think, Felicity, that you have somebody that you trust who is looking at the property for you. Firstly, it's wise if you're buying as an investor interstate and you don't have the time to get on a plane, go and look yourself, and most people don't. I think it's worth spending the money to appoint a good, well-credentialed buyer's agent to do that work for you. So you've got somebody representing your interest inspecting the property in the first instance. And then before you get to the point of actually committing to buying the property, you need to have a building inspector and a pest inspector look at that property. These are the inspections that matter the most. The things that you probably need to be most aware of as a buyer are things that you don't necessarily see. And you could inspect it yourself and not actually see the things you need to be concerned about because they tend to be hidden. It might be dry rot, it might be termite damage underneath the house. That kind of problem is only revealed when you get a qualified building and pest inspector to get in there and have a look at it in all those hidden places. So for me, there's actually no point in me personally inspecting property because the things I really need to know about are things that I'm not likely to see. It's that qualified professional, that's the inspection that matters most. So yes, you can buy sight unseen safely and prudently, but with the proviso that you make sure that you have these inspections done by the qualified people on your behalf, and be happy to pay a fee for that. Because to not do it, I recently was in a discussion where I was made aware of somebody who bought a property and wanted to save the money, save the fee, so they got a friend to go and look at them for them. And that friend wasn't qualified in terms of being a building and pest inspector. And the person in question went ahead and bought that property on the basis of the report from their friend, only to find out later that there were hidden problems that cost tens of thousands of dollars to rectify. So yes, buy sight unseen, but make sure you get those very important inspections done by the people who matter the most, the qualified building and pest inspectors. That's the one that matters. Okay, moving to a question that came in from Erin. I was interested to know about Sutherland Shire in Sydney. And yes, good question. Happy to talk about Sutherland Shire. It's a part of the Sydney market that I found very interesting. It's a part of the Sydney market that's grown a lot through this property boom that's been sweeping the nation, with Sydney very prominent in that. And Sutherland Shire has been one of the leaders of that for a number of reasons. Firstly, it offers relative affordability, and many people looking at the pricing. I'm about to put up some typical pricing on the screen, but many people look at the median prices, particularly for houses, and say, well, that's not particularly affordable, but in Sydney terms it is. relative to what you might pay in the eastern suburbs or the inner west, or in particular in the northern beaches of Sydney. Sutherland Shire offers a lot for a relatively small amount of money in Sydney terms, particularly its apartment market. And why it's so attractive and popular with buyers is because it's got such great proximity to water and to national parks. So it's a great lifestyle area at prices that are much lower than some of the more upmarket areas, much closer to the CBD of Sydney. It's also got very low vacancy rates. Most postcodes in Sutherland Shire vacancy rates below 1%. And so rents are very strong. So if you're buying there as an investor, you have the prospect of getting good rental income. Now, just looking at typical pricing, median prices for some of the suburbs in Sutherland Shire. You can see that Cronulla itself, one of perhaps the best known of the Sutherland Shire suburbs, is now got a median price for houses above 3 million. So that's not particularly affordable, but the mainstream in Sutherland Shire, the pricing is above $1 million, but considerably less than 2 million. So it is relatively affordable in Sydney terms, but perhaps increasingly what's most relevant to a lot of buyers is that the apartment market is a lot more attainable. So there are a number of suburbs there with median apartment prices in the 700,000s. Some have nudged up with recent growth into the 800,000. Cronulla, which has had a lot of price growth in this property boom, has now got a median price for apartment above $1 million. But most suburbs are more like a 700,000 or 800,000, which is a little bit more attainable. Just going back to that slide, the reason I've got asterisks beside Engadine is it's the most popular suburb in Sutherland Shire in terms of the number of sales that happen in a typical year. Very high volume market, and it's possibly because it's actually one of the cheapest of the suburbs in Sutherland Shire. Median house price 1.3 million, and I don't have the price on screen for apartments that way. So there it goes, 740,000. So it has the greatest number of sales of all the suburbs in Sutherland Shire, probably because it's the most affordable of them. Okay. So moving on to the next question, which is from Philip, and I really like getting this question, Philip, because it's something that occupies my mind. And he's asking about the price data that are published monthly by firms like CoreLogic. We also have price data regularly coming in from other sources, the Bureau of Statistics, domain.com.au, SQM Research. But the media gives most prominent to the monthly price reports published on the 1st of every month by CoreLogic. And he says, Philip says, well, I presume the figures come from the records sales, state government departments, and given that settlements are often 6 to 8 weeks after contracts are signed, does this mean that the data lags actual current market sales? And the reality is, the answer to that question is yes. The data does lag, so it's out of date, I guess, even as it's published. There's all sorts of issues involved there, but when markets are moving as quickly as they have been in the last 18 months in particular, then the data that's been published today actually relates to sales that happened a couple of months ago, and the data is already almost irrelevant because prices have moved so much. We're seeing prices moving very, very quickly. We're seeing many locations have grown by 10% or more in just 1 quarter. So the published data is actually lagging actual events. It's, as I say, out of date even on the day that it's published. But more than that, what we see from CoreLogic, on the 1st of May, they published their report purporting to tell us what happened to prices in April. But of course, if you look at the report, it's a very detailed 6-page report full of graphs and charts and analysis of what the figures mean. They didn't write that report in the hour before they published it. Would have taken them a number of weeks to pull that report together. So they're actually working on the report that's published on the 1st of May in the middle of April. And of course, at that point, all of the sales in April haven't happened, and all the sales that have been contracted haven't settled. So it's more likely to be telling us what happened to prices in March than it was in April. So be mindful that the data that's published in media from the various data companies needs to be taken with many grains of salt. And as you look at the data, when you compare data from different firms, you realize just how rubbery the figures are, that it's all, I believe, dodgy data to a certain degree. You've got all those different sources, they've all got their different methodologies, and they're all coming up with different answers. We have one of those data firms on screen saying that the Melbourne market in terms of house prices has fallen a little bit in the most recent month, where another one says that Melbourne house prices have actually risen in the month of April. And the question arises, well, who do you believe, or what can you believe? But let's have a look at the median price for Brisbane. What is the median price for Brisbane? According to the latest figures from CoreLogic, it's 857,000. Domain says it's 831, and SQM says it's 910. There's quite a big difference in range there. You might think as consumers that the answer to the question, what is the median house price for Brisbane, is a matter of fact. Well, it's not. It's each of those data firms are pouring all of the sales that might happen in a typical period, thousands and thousands of sales, into one big melting pot, and it spits out a number which says this is the median price. Well, depending on their methodology, they're all coming up with different answers. Have a look at the answers for Adelaide. The median price is 658 according to CoreLogic, 690 according to SQM, and 750 according to Domain. So is the median price in Adelaide 650 or 750? It depends on whose price data you believe. And I would suggest you probably can't believe any of it. It's all, as I say, rubbery figures to a certain extent. Then we have, you can Google any suburb or town in Australia. I did the exercise. I asked Google to tell me what's the median house price for Blacktown, suburb of Western Sydney. I got answers from 6 different research sources, and I got basically 6 different answers ranging from 746,000 to 900,000. That's a huge range. That's a difference from top to bottom of 150,000. What can you believe there? I also did the exercise only yesterday for another purpose for the suburb of Epping in Melbourne in Victoria, and got 6 different answers from 6 different sources with a very big range from top to bottom. So be mindful that the price data is not gospel. You need to treat it as ish when you're making your assessment of what's going on in markets. Always be mindful if you're reading an article telling you what's happening with prices in a particular location, according to, say, CoreLogic, that there'll be other sources that have different results, and you need to do more extensive research to get a real feel for what's going on. Okay, another question from Mark. He's asking about the rising costs of housing construction, very topical at the moment. Even before COVID came along and changed everything, we had very high construction costs in Australia. The cost of creating new house and land packages in Australia is ridiculously high, partly because, or perhaps mainly because, half the cost is government taxes, fees, charges, levies at all 3 levels of government. They all use it as a cash cow. But now we have the additional factor, which has come in recently, where shortages of everything, shortages of bricks, shortages of bricklayers, all the tradespeople that go into building a house, all the materials that go into building a house are in short supply. And so we've had very fast and rapidly rising costs of construction. It takes twice as long to build a house as it used to. There's delays in the system, and that's adding to the cost pressures as well. And the question from Mark is, do we think that the new high for construction costs are the new normal, and will costs reduce once supply issues are resolved? And it's a little bit hard actually to provide a definitive answer. I would have thought that once we deal with the supply shortages, and they will in time be dealt with, the various firms who are in the supply chain taking steps to increase their production, to provide what's needed. But it's going to take time. So eventually we'll get to the point where we don't have those shortages of materials and tradespeople, hopefully, and then perhaps some of the pressure on costs will come down. But I noticed that the building industry itself was saying only earlier this week that they believe that the costs that are currently in the system are going to stay with us long term. But I think initially we got to this point because the federal government introduced a scheme with grants encouraging people to get out there and build new houses, and it was very successful. But being politicians, they didn't really think about what might happen beyond the press conference, and they didn't think about, will we have enough supplies of everything that goes into building houses if this scheme is fantastically successful, as it turned out to be. So we've ended up with shortages of materials, shortages of tradespeople. The floods in many of the locations along the east coast of Australia recently have added to the problems, more pressures in the system, and it now takes twice as long to build a house. So I think higher costs are going to remain with us for a while. They may come down a little bit, but I don't think they'll go back to where they were before the current shortages. Okay, so Andy's asking the question that's probably on a lot of people's lips this morning as they read about the decision yesterday by the Reserve Bank to lift the official interest rate, which was inevitable to happen at some point this year. It was just a question of when. There was only one way for interest rates to go, and that was up. So that is now with us, the first time in 10 years that we've actually seen an interest rate rise at the official level. And Andy's question is, will that impact prices? Andy was asking specifically about Sydney, but it's a question that could be applied to any location across Australia. Interest rates are predicted actually to continue to rise. We'll probably have more rises before the end of the year. And what impact will they have on prices? Well, in my view, the impact on prices is going to be minimal. In fact, it's going to be nothing like we're seeing in media. Media has been telling us for some months that interest rates will rise, and that the impact of that will be prices will collapse. Now, I feel very confident in telling you that that won't happen. It's never happened before. If it did happen, it would be unprecedented. We've done what most of the commentators in media and most of the journalists haven't done, where we've looked back at what's happened in recent history when we've had a period of rising interest rates. What impact has that had on prices? Because, that's the precedent for us to provide an answer now. And what we've seen in previous property booms in Australia, the one that happened about 20 years ago at the start of this century, and the one that happened in the late 1980s, which was an extraordinary property boom, both those previous national property booms happened during periods of very high and rising interest rates. So in the 1980s, interest rates were in double digits. Everyone's paying more than 10% on their mortgages, and the interest rates kept rising, and the boom kept going, and prices kept rising. And mortgage rates went as high as 17%. Can you imagine that? In the current era, where a lot of people are paying an interest rate that starts with a 2, at that time, and I was one of those people that had a mortgage back in the late 1980s and was paying 17% on their mortgages. So it took multiple interest rate rises and interest rates getting that high before the price boom stopped in the late 1980s. Now, 2001, 2 and 3 was the last time we had a genuine national property boom. At that time, interest rates were much higher than they are now, and they were rising, and prices kept rising, notwithstanding the increases in the interest rates. Now, ANZ, about a week ago, published a study or a report that they'd looked at the last time we had a period of rising interest rates in Australia, keeping in mind that we haven't had an interest rate rise for 10 years in Australia. So the last period where we had consistent interest rate rises by the Reserve Bank over time was 2002 through to 2008. So there was a 5 and 6 year period where the trend was of interest rates rising. And as ANZ points out in its report, during that period of time of rising interest rates, housing prices in Australia rose by more than 50% in that era of rising interest rates. So keep that in mind when you pick up a newspaper today or tune into media in some other way and you're hearing that prices are going to fall 15% because the interest rate has risen once. It's not going to happen. If it did happen, it would be unprecedented. There's no reason why it will happen. And I'd like to point out that, yeah, looking at the precedents of history, it won't happen. The headlines are just over the top. What passes for analysis of the situation is, I think, extremely poor, and it's not based on research analysis. It's not based on any sophisticated modeling. It's just people seeking to generate headlines to achieve free publicity for themselves, as far as I can tell. There's a lot of buffering in the system. One of the reasons why I believe the interest rate rise that we've just had isn't going to have a major impact on markets. I don't think it's going to slow markets down to any great degree. It's not going to cause a very high level of mortgage stress, contrary to what media is saying. Now, obviously, most people will much prefer interest rates not to rise. It's going to mean they're going to be paying more on their mortgages, but not massively more. And it's the buffering in the system that means that this won't have a major impact across the nation and across property markets. Firstly, most households are well ahead of their repayments. Many households are more than 2 years ahead on their repayments for mortgages. That's the first buffering in the system. The second one is that because of the pandemic period, the lockdowns, the various restrictions, people not being able to travel, record savings are in the system. There's billions of dollars in the bank that weren't there pre-COVID in savings. But the third and the most important buffer is that APRA requires lenders like the major banks, when they assess you or anybody for a loan, a mortgage to buy property, you're not assessed at the current interest rate, you're assessed at the current interest rate plus 3 percentage points. You have to show that you're able to repay that loan with interest rates much higher than they are now. So anyone getting a loan now and getting an interest rate of say 2.5%, will be assessed at your ability to repay that loan if interest rates were 5.5%. And that's the most important buffer in the system, and the one that's going to mean, it means that all the people out there with mortgages wouldn't have got their loans according to the APRA dictate unless they could show that they could repay that loan at 5.5%-ish. So just, I think, disregard the extreme sensationalist media that you have been seeing for many weeks and months, and will no doubt be seeing more of today and in the coming weeks. It's just over the top. It's not realistic. And it's very, very unlikely that we're going to see a major impact on prices as a result of this interest rate rise. And yes, I did refer in my commentary a moment ago to that ANZ report, which is worth repeating, that the last time we had an extended period of rising interest rates in this country, house prices through that period rose. It was actually more than 50% according to the ANZ report. And I know it to be true because I've done that research myself. Okay, a question from Bell was asking, would you invest in Perth? And if so, which suburb would you target? Well, firstly, I would invest in Perth. I think Perth is going to have a pretty good year this year. Probably it will be Perth's best year for price growth in more than a decade, since the last big resources investment boom when Perth was leading the nation on house price growth. That stopped about 2012, 2013. Perth as a capital city has a property market that's more volatile than most capital cities, because its economy is so hooked into the resources sector, which in itself is volatile in nature. So Perth, after that last boom, had a period of about 6 years where prices didn't rise. And so now it's the most affordable capital city in Australia. And the buying is particularly good value for money. And there are pressures in the system likely to lead to Perth having big price rises. Probably its best year since 2012. Sales activity is up. Vacancies are very, very low, the lowest they've been for a long, long time in Perth. I think the activity in the market, talking to people at the coalface, often the best information you can get is talking to people at the coalface of the market rather than the historical price data that's published in media. If you talk to investors who are trying to buy in Perth, buyer's agent operating in Perth, selling agents, valuers, you'll find that they'll all tell you that the Perth market is extremely competitive prices are strong, properties are selling very quickly. And so I think, yeah, I think it's going to be a good year for price growth in Perth, the best in 10 years. The second part of the question related to which suburb I might target in Perth. And I often get asked questions like that. There's no right answer to that question. The answer often depends on the individual, your circumstances, how much you can afford to buy, for example. So there's lots of right answers to that question. Nicholas, who asked the question about Perth. If you're wanting to buy at the lower end of the market for affordability and pretty good rental returns, the cheapest part of the Perth market is Kwinana, good credentials for growth, already seeing strong price growth. The number of, the sales activity in that precinct is rising very, very strongly over the last 12 months. And I think will continue to rise because it's coming from a low base. Some of those suburbs, Aurelia, Parmelia, etc., still have median prices in the 200,000s, but rising. Rockingham, not far from there, I think is a great prospect. A lot of coastal suburbs, seaside suburbs, where you can still buy houses in the 300,000s, but now with recent price growth, more realistically in suburbs like Rockingham itself, Waikiki and others, Baldivis, very, very popular suburbs for their affordability, but you're more typically now perhaps buying houses in the 400,000, but that's pretty good buying for a capital city in coastal suburbs, close to beaches. Also close to very, very big employment zones, a little bit north of Rockingham, major industrial zones where a lot of people work. Wanneroo's up in the far north of Perth. Again, very affordable, good infrastructure up there. One of the strongest population growth areas anywhere in Australia. If you're aiming for higher price brackets, maybe middle market, then you might target Joondalup, northern suburbs. I like Joondalup for it's a suburban CBD in the north with lots of amenities in the Joondalup CBD, university campus, hospital, transport interchange, office buildings, retail, close to parkland, and around that's clustered suburbs, which are in the sort of middle price ranges by Perth standards, but I think good prospects there. And Stirling, which is a little bit further south, closer to the CBD. I like Stirling. It's been a very, very good performer, even during the downturn in Perth. Stirling suburbs held up pretty well, growing good now. And it's got a range of price points. There are beach suburbs where you're paying over $1 million for houses, but there are suburbs where lower price ranges right down to cheaper ones like Balga, where you might be buying typically in the 300,000 or 400,000. So the range of answers to that question, where to buy in Perth, it depends on your price range. It depends on your own circumstances, your own strategy as investors. What you already own is also a factor. Okay, question from Bell was asking a question that we hear a lot, the age-old question of cash flow versus capital growth. Which one is more important in what circumstances? And my answer usually is, look, you don't have to make a choice between the two. If you choose your location well, and there's plenty of options for this around Australia, you can get a nice balance between both. You don't have to make a choice between capital growth and high yield. You can buy in locations with good credentials for growth, where you can buy affordably and get a good rental return, cash flow neutral, maybe a little bit cash flow positive. So you don't have to make that choice. I think the ideal investment is a location that has a balance of the two. Now, yes, again, the answer does depend on the individual, what your strategy is. There are some people who prioritizing capital growth and others for whom a high rental yield is more important. But as I said, it is possible to achieve both, to buy in locations that do have both. And some of the options that are available if you're wanting to buy capital cities. You've got good growth potential, affordable, high rental yields. Ipswich City in the Brisbane metropolitan area is one option. The northern suburbs of Adelaide, which I talked about in answer to one of the earlier questions, provides good options, good price growth happening in these areas, as well as rental yields that can be 6.5% in some of those cheaper areas in the northern suburbs of Adelaide. Onkaparinga in the south. The southern fringe of Adelaide also offers affordability and high rental yields. And across regional Australia, there's lots of options, places that have got great prospects for future growth, where you're buying affordably with rental yields, say, minimum 5%. Toowoomba, Rockhampton, Bundaberg in Queensland, just some of the options. There's plenty of others in New South Wales, Tamworth, Dubbo, Wagga Wagga, Hunter Valley. Lots of good options in regional Victoria, including Bendigo and the Latrobe Valley. A little bit earlier in the broadcast, I talked about some of the regional centres of South Australia, which also offer those prospects. Right across Australia, there are good regional centres where you can get in affordably, good rental yields, good cash flow from those investments, and prospects for good growth. So you don't really have to make that choice. Belle, I just point out that there was another part to your question asking about whether you should be buying, what entity you should be buying in, whether a self-managed super fund. I think those sorts of questions you really need to direct to an accountant who knows something about your personal circumstances, because the answer to those questions really depends on your circumstances. And it's impossible to answer without knowing what that is. And but really, it's not something I'm qualified to answer. You really do need to go and talk to your accountant, or find an accountant if you don't have one, and talk about your circumstances and whether it's what sort of entity it's best to buy in. Okay. All right, so those are some of the questions that came in a little bit earlier, and I was able to take some time to prepare some answers. So now, if we could just now turn to the ones that are coming into the chat box and the Q&A panel, so that those of you joined the broadcast and just type some questions in. Michelle is asking if I could talk about my view of the Perth market. I've actually just, as you've probably heard, Michelle, if you're watching, obviously you are, because you just typed this question into the chat box. I've just talked about Perth. You asked specifically about the northern suburbs, and you're talking about Clarkson and some of the suburbs of Wanneroo. Look, I think good prospects, despite the fact that this is a new development area. Quite often you find that new development areas tend to have high vacancies because they're building lots of new houses. It takes time for that to be absorbed by the market. But right now in the northern suburbs of Perth, they have very low vacancy rates because the demand's been so high. First home buyers have been particularly active in Perth. I think firstly because it's the most affordable capital city in the country at the moment, and also because there's higher levels of government support at a state government level for first home buyers than most parts of Australia. So there's been lots of demand at that end of the market. So we've seen lots of demand, low vacancies, prices growing at pretty good rates in those northern suburbs of Perth. Okay, Felicity, yes, I think we've answered those questions that you sent in earlier. And your follow-up question is, you missed the early part of me, can you send a link? Look, everyone who registers for all of our webinars, including this one, will receive a recording. So if you, for some reason you have to leave the broadcast, or you weren't able to join, or you came in late, you will receive a copy, and so you'll be able to watch it again at your leisure. Thank you, Phil, for your thank you. Gretchen, any comments on the impact of the election and interest rate rise? I did talk about the impact of the interest rate rise. I think media's reaction is just completely overblown and unreasonable, not based on historical precedents. The impact of the interest rate rise will be relatively minor in terms of impact on prices. The elections, well, when an election's called, particularly a federal one, there's usually a bit of a pause. A lot of people want to wait to see what see who wins. and what impact that might have before they make big purchase decisions. Look, I don't think it makes any difference whether Labor wins, whether the Liberals win. Their policies on matters that impact on real estate markets are very similar. So I don't think it really matters. And always keeping in mind that real estate's a long-term play anyway, and the fundamentals of real estate investment don't change on the outcome of federal elections normally. And we don't have this time in play like we did 3 years ago, the issue of capital gains tax and negative gearing. So I think the impact of the election is going to be muted. If you're thinking of buying, just get on with it. There may be an opportunity to actually buy right now with less competition, because a lot of people will pause and await the outcome before they actually make purchase decisions. See, if you're in the market now, you might be receiving less competition. All right, Francis, what are your thoughts on Point Cook and Victoria? Francis, I don't have any particular strong views about Point Cook. It's part of the city of Wyndham in the far southwest of the Melbourne metropolitan area, heading down towards Geelong. It's a master plan. It's a suburb created by a master plan community development, which is still a work in progress, but it's been in place for quite a long time. Prices there are now quite high. They've shown good growth. Wyndham City generally is a good place, lots of jobs there, relative affordability, good transport links. There's no reason why, owning property there is not a good thing. If you do own property there, you probably have seen it growing in value in the last couple of years, and it will probably continue to do so. But there's nothing particularly special about that location that stands out. I'm not sure why you're particularly interested in Point Cook, but if you're thinking of buying there, always ask the question, no matter where you're thinking of buying in Australia, ask yourself the question, is this the absolute best place in Australia I can buy right now? And sometimes people sort of fixate on locations for particular reasons that don't necessarily have a sound foundation. Dillop, going forward, more growth to be seen in regional Australia than Metro City? Well, I think so overall, very general statement, but for the last several years, the regions overall, generally speaking, have been outperforming the capital cities on price growth. The latest figures show that that's certainly the case right now. There's certainly overall more growth in prices happening in the last few months in the regions than in the capital cities, but there are exceptions. Brisbane, Adelaide, Perth are very strong at the moment, but overall the regions are more strong, and I think it's going to continue. The biggest trend impacting real estate markets in Australia so far in the 21st century is the one I call the exodus to affordable lifestyle. Media has misrepresented that trend, as it does in so many topics relating to real estate. It's portrayed as being something caused by COVID, that people have moved to the regions as a reaction to the lockdowns in the big cities. That's not the case. This trend has been underway for a long time. Now, Sydney's been losing population to internal migration, people moving to other parts of Australia for at least the last 10 years. Melbourne's been losing population for the past 5 years in large numbers. So it all happened long before COVID came along. And so it's not going to stop when COVID is dealt with. It's about people seeking a high level of affordability, a different lifestyle, such as the one you can see portrayed behind me. This is Maloney, where I'm currently sitting. People, want to live in these areas, having realized that through technology they can work remotely, and more people are making that choice. So it's not going to stop anytime soon. And I think regional Australia is going to continue to offer that attraction of an affordable lifestyle relative to the big cities. So they'll be moving, they'll continue to move to the regions and to the smaller capital cities like Perth, Adelaide and Brisbane. Okay, Louise, the Gold Coast has seen huge growth. Do you think this will continue or slow down? Well, I think it will continue because it's part of the trend I've just described, Louise, the exodus to affordable lifestyle. Now, the Gold Coast in the last 18 months has managed to produce a property boom at a time when the economists said its market would crash, because Logically, they thought that with international borders closed and the overseas tourists no longer able to come, the whole Gold Coast economy would be adversely affected and prices for real estate would fall. But economists don't necessarily understand real estate markets that well, and they got that one, like so many other things they get wrong, they got that very wrong. And the Gold Coast has had spectacular price growth through this period where logically you might have expected them not to. So we're seeing big increases in not just house prices, but also apartment prices. It's been a while since apartment values have risen much on the Gold Coast. Surfers Paradise had no growth for 10 years until recently, but now we're seeing median prices for apartments in suburbs like that rising. And that's all happened at a time when the Gold Coast's underlying economy, international tourism, was so adversely affected. So now, with international borders opening up again, the Gold Coast is going to have a further surge. The buyers, by the way, have come from interstate. Buyers from Sydney, buyers from Melbourne, expat buyers coming back from overseas have driven the Gold Coast market. Now, I think the Gold Coast is going to continue to grow, but it won't continue to grow at the same levels that it has in the past 12 or 18 months because those were extremely high growth rates. But one of the things that's going to keep the Gold Coast economy and property market strong going forward is that's going to play a very major part in the 2032 Olympics, as will the Sunshine Coast and Toowoomba. It's not just the Brisbane Olympics. It's going to be spread around. The Gold Coast is going to get a lot of events. So it's going to have to invest further in infrastructure, as it did in the lead up to the 2018 Commonwealth Games. So we're going to see a big impact from that in the Gold Coast in the coming years. And it starts now, and it sounds like 2032 is a long way away, but the investment that's needed to prepare needs to start now, and it already has started. Elizabeth was asking top 4 locations in Southeast Queensland. Well, again, there's no one right answer to that. The answers depend on the individuals, what price range they're in, what they already own, what their strategy is, how much they can afford to borrow. But the ones that I like for various reasons, I like the Redcliffe Peninsula because I think it's a market that's been very undervalued and underrated. It certainly had growth in the last 12 months, but it's got more to come. You know, as the name suggests, it's a peninsula, access to water, really good buy at the moment. I like Ipswich City, the cheapest part of the Brisbane market. There's been a huge uplift in sales activity right throughout all the suburbs of Ipswich in the last 12 months. Hasn't yet fully translated into the price growth we've seen in other parts of the Brisbane market. So I think there's potential for more growth. And Ipswich, which also has lots of big employment zones out there, good amenities, lots of reasons why Ipswich is going to continue to grow. There's an argument that based on the precedent from other cities that have hosted Olympics, that the suburbs that have the highest percentage growth as a result of the impact of an Olympics are those that are close to the main venues. So the big venue, the biggest venue for the Olympic Games will be the govt, on which they're going to spend $1 billion to bring it up to standard. It's already a pretty good facility, but it's going to be a better one by the time they spend another $1 billion. So the suburbs clustered around there, you know, you could logically expect to show some growth. These are some expensive areas with median house prices above $1 million, like East Brisbane, Annerley, Wollongabba itself. So we're going to see developers building a lot of apartments in those areas as well. So be careful of that. But that's another part of the market that I think is going to get major uplift over the next 10 years. And also like just the middle ring northern suburbs of Brisbane, close to the airport, close to the seaport, good transport links, lots of good schools up in that area and a relative affordability. So those are some of the areas that stand out in Brisbane. Mark, your thoughts on the Sunshine Coast after very strong growth? Any suburbs you'd recommend for a first home buyer? Well, the Sunshine Coast, as you're observing there, Mark, has already had, say, 3 years of really big growth. It's been one of the national leaders, probably the most spectacular places for price growth over the last 3 years in Australia would be the Sunshine Coast, the Mornington Peninsula in Victoria, and the Central Coast in New South Wales. It's been driven by infrastructure spending. It's a great case study on how an economy and a market was very mediocre has been absolutely transformed by big infrastructure spend. The power of infrastructure. It's a very simple but very important lesson for people trying to find out good places to buy. So the Sunshine Coast has now become quite an expensive place to buy real estate. In terms of recommendations for first home buyers, well, it's really, if you want to go coastal, then you need to be thinking apartments, and even they are very expensive now in many parts of the Sunshine Coast. I mean, like Coolum, for example, median house price has risen 40%, the median apartment price has risen 50% in the last 12 months. I mean, my God, incredible growth rates. But places like Maroochydore, Mooloolaba, Caloundra is actually a good option, a little bit cheaper, but it's been gentrified extensively over the last 10 years. It used to be the daggy end of the Sunshine Coast, but not anymore. So it's a good option, a more affordable option. And then you've got places like Nambour, but even Nambour's become quite expensive for houses now after recent growth. But it's an option that still has appeal for first home buyers because despite its down market image, it's got a lot of good infrastructure. It's on the train line, so you can jump on the train and go to Brisbane. And that's the most affordable part of the Sunshine Coast market. But the evidence is, looking at the sales volumes market, the Sunshine Coast market for now has passed its peak and is sort of tapering off a bit. But for all sorts of good reasons, including the ongoing infrastructure spend and the part that the Sunshine Coast will play in the 2032 Olympics, it will continue to have growth. Cameron, thank you for your thank you. You'd like to know my thoughts on the Brisbane market in the next few years. Look, I've touched on it a number of times already, Cameron, but yeah, Brisbane, for the last, up until a year ago, the previous 10 years, Brisbane market didn't do very much in the way of growth. The next 10 years are going to be a lot more prolific, and we've seen the beginnings of that. The past 12 months has been spectacular. Brisbane leads the country in terms of annual price growth. It's got more to come. It's still relatively affordable compared to the big cities. It's got a big infrastructure spend underway. The population data favours Brisbane and Southeast Queensland massively. Lots of people are moving there. And the 2032 Olympics means that a lot is going to have to be spent on infrastructure, transport infrastructure, sporting infrastructure. The private sector is going to be investing in hotel infrastructure. All of that is going to be creating a lot of jobs. So Brisbane is going to continue to rise. One of the things about Brisbane, again, media with their knee-jerk reactions to the situations when we had the floods, devastating as they were for many, many people, we're told that Brisbane prices would fall. Well, they haven't. The Brisbane market continues to roll on. And so it's shaken off. In terms of a property market, the negative impacts of that event is still growing very strongly. And I think will continue to. Philip's asking about the Logan area of Brisbane. Is it too late to enter because prices have risen a lot? No, it's still very affordable. You know, if you're a buyer from Sydney or Melbourne, you're looking at Logan City prices, they're very attractive. You're still, you know, lots of places where you can still buy in the 300,000s for houses, but more realistically 400s now. It's still very cheap. You can't buy anything for 400,000 in a house in Melbourne, and you probably can't even buy an apartment in Sydney for a price as low as that. And there's a lot happening infrastructure-wise. Logan City is nicely located, halfway between central Brisbane and the Gold Coast. And there's a lot being spent on infrastructure there that's going to keep pumping up that economy. Advice, Luaba, on choosing a buyer's agent, especially in other cities. Look, a good buyer's agent doesn't have to have an office in the city you want to buy in to be able to help you. The good buyer's agents have a network of people they use, so they might be based in Sydney, but they are able to operate effectively around the country with their relationships they have with property managers and building and pest inspectors, etc., in all of the major markets around the country. So yeah, it's a case of getting a recommendation from someone who's had a good experience with a buyer's agent. There's plenty of good ones out there. There's also plenty of people calling themselves buyer's agents that aren't particularly good. It just seems that right now, particularly, whenever there's a property boom, lots of people come into the industry that probably shouldn't be in the industry. And a lot of people think that being a buyer's agent is a great way to make lots of money really easily. Well, it's not. It's a lot of work and it requires a lot of expertise. So it's important to choose a good one. And I'll perhaps suggest that probably the best thing is to drop me an email, Ryder, R-Y-D-E-R, @hotspotting.com.au, and I can give you some suggestions of buyer's agents that might be able to help you. Kay's asking about growth for apartments in the city, Brisbane, West End, right next to South Brisbane. Look, those markets like that, you could also include Fortitude Valley, have been oversupplied in the recent past, and it's taken a long time for that to be soaked up. But now it has been soaked up, and vacancies are now down at acceptable levels, and we're starting to see values rise again. And very affordable compared to houses. So it's a way to buy close to the centre of the city if that's where you want to be, and be able to buy relatively affordably. Just be aware that apartment markets like that do have this propensity to be oversupplied when developers go overboard, and the Brisbane Olympics might inspire them to go through another round of overbuilding. So just be careful in terms of future growth prospects. I do think around Australia and the big cities in particular, more and more people will be opting for apartments. There's going to be more demand for apartments for affordability reasons. The gap between, and this relates to a question that was also sent in by Felicity, the gap between typical prices for houses and typical prices for apartments has grown even bigger in this recent property boom. And so more and more people will be making the decision, look, I just can't afford houses in the areas where I want to be, therefore I'm going to go for apartments. And we've actually seen very good growth in apartment prices as well in many parts of Australia, spectacular growth in some cases. So it's not a case, the dominant paradigm is that houses on land grow more than apartments, but we have nevertheless seen very good growth in apartment prices in many parts of Australia. So there are prospects for growth, provided be careful about where you buy, because oversupply is always a risk. Do I see an oversupply of freestanding homes in Ipswich? I really don't, Anthony. I think that market really struggles to keep up with demand in terms of the production of new homes, particularly right now where there's so many delays in the system. It's taking so long to build houses that I think it's going to be more a case of the market struggling to keep up with the demand. Debbie's asking about Port Macquarie for investment now. Look, I think it's a good place. It's got a decent economy. It's coastal. It's one of those places being targeted by the lifestyle buyers. So I think if you bought an investment property there, you'd probably do okay. But again, as I referred earlier, always ask yourself the question: Port Macquarie, not a bad place to buy, but is it the absolute best place I can buy for investment? Because the whole of Australia is your market. Is this the best place? Aaron's asking about my thoughts for Bunbury, a very important city in regional Western Australia, strong economy, showing signs of growth. Now, it's been a long time since Bunbury's shown any growth. It's now starting to grow. So if you own property there already, it's probably going to be performing better than it has over the last, say, 10 years. But again, would I choose Bunbury over all the various other options that are available to me around Australia? No, it wouldn't be on my top 10 list, that's for sure. But nevertheless, it's an important city showing growth at the moment. Richard's asking any thoughts on the Mornington Peninsula in Melbourne. Look, the Mornington Peninsula has been, I mentioned it earlier, the top 3 places in Australia for a spectacular price growth in the past few years include Mornington Peninsula, but it's now had an incredible amount of growth, become very expensive. Great place, great lifestyle, on the fringe of Melbourne, but you would have wished to have bought this, say, 2 years ago before it had all that amazing growth. I mean, we've seen suburbs that have grown more than 40% in 1 year there. So it's now become quite an expensive market. And if you were thinking of investing in the Mornington Peninsula, I'd be asking the question, where can I go that's got the potential to show that sort of growth, but hasn't grown that much yet? Maybe, answers to that question, I'd have to sit down and think about what those answers were. Mike was asking about house and land packages in Ipswich. Yes, but given the delays and problems, I'd probably rather be buying an established house than a new one at the moment. But if you've got your footprint on a house and land package in Ipswich, you're probably buying pretty affordably. It's in a growth market with lots of credentials for future growth. It could do quite well. Michael's also asking about new apartment builds in Melbourne. And as I said earlier, I think apartments are going to be receiving more demand than before. We could see some pretty good growth in apartment prices in Melbourne, but just be careful about those areas of inner Melbourne that build masses of really big new mega projects like Docklands and South Bank. The potential for oversupply we've seen in over the past 10 years could be repeated. I'd rather be going to more boutique apartment areas, not too far from the city, like Brunswick is one example that springs to mind. Andrew's asking, any dark clouds on the horizon you're concerned about? Not really, just excessive media reaction to things like interest rate rises. They'll overstate the impacts. They'll make forecasts that won't come true. It's important, I think, Andrew, just to tune out all that media white noise and do real research and buy sensibly. But don't allow sensationalist media to affect your decision making. Okay. Look, we've actually gone 10 minutes over time, and there's still a lot of questions to answer, but really we do need to, at some point, bring this broadcast to an end. Thanks for all your questions. There's, as usual, there's been more questions than I can really answer on the time available, even having gone 10 minutes over the allotted hour. I particularly thank those people who sent in questions earlier that gave me a chance to think about the answers and prepare some information and some graphics to give you really detailed answers to those questions. I hope you found it useful. We will do this again soon because it's obviously there's good demand for it. Lots of people have asked questions, though I just haven't had time to answer all of them. But we've certainly done the best we can to get through most of the questions that have been put up today, and particularly those ones that were sent in earlier. So thanks everyone for your participation, and we will do it again soon. There'll be another webinar in 2 weeks' time when I will be presenting alongside Jason Pato from Alliance Core about some important property market issues for investors. So we'll be on again in 2 weeks' time. So thanks for being part of it today, and bye for now.